Good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest in the UK. At Core Finance, over the last, couple of months now, I've spoken about our most conservative trading plan called Worry-Free Investing, which is working exceptionally well at the moment. Today, I just want to have a look at a low-risk, high-reward trade in gold mining shares. And when I say low risk, I mean that very low capital exposure is required to actually ascertain as to whether the trade is going to work or not. So I'm going to try and get into the gold market right at what I think is support. Before we go there, that's the overall UK market, and the overall UK market over the last year. You can see the sell-off of COVID last February and March, and this run-up which has been in place, and that run-up is still moving. We had a little bit of a speed wall back in November, but since the 11th of November, the long-term trend of the London market is up, and our worry-free investments are doing exceptionally well. That's the US market, and I'm just highlighting the sell-off that we've had in the US market, especially in tech stocks. And that seems to have run its course, folks. And the shortest term measure of the trend on VectorVest has turned back up again 2 or 3 trading days ago. And I've taken some small but tentative positions in the American market. I've taken a position in Microsoft. I've taken a position in apps. And if it breaks that high, I shall add to those positions. That's a story for another day. There's the gold market. And the gold market has pulled back into an area of consolidation. Now, I haven't put on the fib levels for those of you that are fib scholars, but the market has pulled back in that flag pattern and has stopped at a 62% retracement of the last big range. And that's at about 1695 as support. Now, when I did this slide late yesterday, gold market was at 1721. I see this morning it's pulled back to the 1700 number. So we'll see if this level can hold. I mentioned at the outset I was going to try and spot a low-risk trade in gold. And by low risk, I mean a very low capital exposure is required to prove as to whether your trading idea is going to work or not. So I've got several shares that I think are worthy of your consideration. The first one is Polymetal. Now, there was an outstanding set of results from Polymetal the other day. I'm sure you must have read them. That's a 3-year weekly chart, and the price actions and those weekly candles. And as you can see, it's going sideways in a similar flag pattern to the gold market itself, which is hardly surprising. At about $1,700, this company is making a heap of money. And the thick green line above the price is the VectorVest valuation, which says that we believe it's pretty much trading at half what it should be trading at. And the blue line in the window below the price is forecast earnings per share, which has risen considerably, and thus the revaluation of the share. It's sitting at support, and I have a position in that share myself at support. Do I know it's going to break up? Of course I don't, but all I know is that I've only got to risk a little bit of money to make quite a lot of money. And if I'm correct in my prognosis, and as a trader, I can't really ask for much else. A small share that I really like is Pan-African Resources. I know the share very well. Now, I haven't got a position in this share myself at the minute, but I'm if I see that 1695, 1700 level holds, I certainly shall be. Pan-African Resources, again, significantly undervalued, growing earnings very strongly indeed, and also pulling and going sideways in that flag-like pattern. So that's something for you to keep your eye on. That share could quite easily double if the gold price, in fact, moves up from that 1700 level. And Anglo Asian, significantly undervalued by the market. Like we believe it should be trading at twice the price that it's trading at. Again, earnings per share is rising, and it's very profitable. It pays an exceptionally good dividend of 5 or 6%, trading in a ascending triangle. And my first mentor, a gentleman by the name of William Delbert Gann, used to say that markets break on the fourth attempt. So if it makes its way up to that old high, if Gann were around, Gann was a very famous trader of yesteryear. He would have said that it's going to break on the fourth attempt. So technically, that ascending triangle is an exceptionally strong pattern, and market sitting right at support at the moment. So that's something for your consideration. These shares are a long, long way from the worry-free investments that I normally present at Core Finance. And then lastly, a copper miner. Now, the copper market's had a great run, and at VectorVest, we've taken really good money out of the copper market in copper stocks, copper exchange traded funds over the last 6 to 9 months. This is Italia Mining. It's a mining operation in Spain, and I'm a shareholder in Italia Mining at the moment. As you can see, significantly undervalued. Growing earnings is a yearly chart over the last year, 6-monthly chart, in fact, over the last 6 months. It's pulled back to support and had a very good day yesterday. That looks to me as if it wants to move up. Now, these are far from worry-free investments. They're all commodity orientated investments for traders, people who can manage risk a little bit to make a lot, and if they're incorrect, they can simply shrug their shoulders, get out, accept the risk, and move to the next trade. So I hope you found this useful, folks. Let's see if that 1700 or 1695 level in gold can hold. Thanks very much indeed.